Everybody, JJ here. I know it has been a minute, but fear not, I have been busy working on my algorithms and really trying to problem solve a huge issue that I had of working with my EA, and that was working within the U.S. regulations, first in, first out. That did not play nicely with my EA that I had worked so hard to create. But I finally have that figured out, and that will be another video of how I figured that out, of being able to place two open trades at the same time with different take profit levels. But anyway, I just wanted to kind of share with you quickly, other than that, which I kid you not, probably took me 2.5 months to work through. Other than that, I have been experimenting now that I know how to code the EAs in FX Dream. I've been laying a lot, and I want to share with you some of the different approaches. Now, I will warn you, if you are an NNFX theorist or purist, you may not appreciate all these, but that's okay, because I appreciate everything about no-nonsense Forex. I just feel as though it's good also to continue to learn and evolve. So some of these new systems that I'm going to show you are veering a little bit more away from no-nonsense Forex, and that's okay. So anyway, this is the algorithm that I shared before. Just quickly going through, and of course, I love Renko. So I know there's people out there that hate Renko, but I love it. And so everything I do, I try to work with Renko. I just feel like it standardizes so much across the different pairs, especially in how the pairs move. So I can get systems that work, well on all of the different pairs. So this is what I'm calling my base algorithm. Excuse me. And let me just go through all the pieces very, very quickly. First of all, I have my baseline right here, which is the magenta line. And if I go up here and I take a look at it, I can show you that it is a moving average. I have it as a period of 100 and exponential. I just find that with Renko, it seems to work really well, as long as you don't follow the 1 ATR rule, because, ATR doesn't really work well with Renko, so I ignore that rule. So that's the first thing. The next thing I have is my overall trend, my big trend, if you will, and that is my on-chart maced, which you can see here is the red and the blue lines. So if I take a look at that, you can see that I am using my first moving average of 20 and my second moving average of 50. And I'm using the method of 3. And honestly, I'm not even sure what that is. It's not simple, it's not exponential, but it may be smooth or it may be linearly. So, sorry, I don't know what that is, but those are the settings. Okay, so my next indicator is the Keltner channel. And that's this blue line and the dotted line in the middle and then the red line. I use this as a quote-unquote danger zone for my trading. If the bars are within that danger zone, it's a good chance that they're in consolidation and I don't trade. It's like a highway. Don't step into the highway. So one of my rules is that the bars have got to open above or below before it is a valid signal. Let's take a look at those settings real quick. Okay, so I've got the moving average of 60, the price mode 0, price, and very important is the K factor, which is the deviation. I have that set to 2.0. And again, these are not default settings, but I've just found that they work well with the Renko. Oh, and by the way, I always use a 10-pip Renko bar. I'm not saying that's the best, it's just easy for me to figure, like 10, 20, 30, etc. So, moving on, the next indicator is my SSL. And this particular one is called the Fast Bar Alert Multi-Time Frame. So if I open that up, you can see that I'm using it on a pretty high setting. I'm using it on the value of 27 pounds. And finally, I am using the Candle Volatility Index. And I'm using that with an 8, which is the default value, but I have chosen the Jurix smoothing method rather than simple. So I just think smoothing works better with the Renko. So that is what's on the chart. And the rules are simple. Okay. This would be a trade right here because it opened above the Keltner channel. It opened above the moving average. We have, actually, that's not an opening because our volume doesn't match. So let's talk about that. But we have green on our SSL, but you know what? We don't have enough volume, so that is not an opening. I lied. So what we want to do is we want to come over. Everything is still met until either here or here, which unfortunately it took a dip, which probably would have brought us out because I have a 3 opposite candle, kind of a trailing stop. So then the next one is here. So this one right here, you can see that it would have taken the first take profit, which is 30, 10, 20, 30. It would have continued to go up until here, which is 3 in the opposite direction, and that would have been an additional 50. So that's how that system works. But what I really want to show you is a couple of other systems that I've been working with, and they're pretty cool, and I'm really excited about them. Okay, so here is another concept. I call this one the 3 super trend or 3ST QQE moving average. And the indicators that I am using are obviously super trend, and I'm using it times 3. So what I'm doing, it's like me using different moving averages, but I'm using these different super trends. So if I go over here and I look at the charts, indicator list, the first super trend, I have inputs of 10 and a multiplier of 3. My second one is 11 and 4, and my third one is 12 and 5. So I just bumped it up by 1 for each of those different parameters. And the rule with the super trend is that all 3 have to be blue in order to, or have to be yellow in order to be a valid buy or sell signal. The other thing that I'm using with this is a moving average, and it is also a 100 exponential moving average, just like the other one. Now, down here, let me close this a second. Down here, this one that you can't really see is QQE. And I like to keep it closed because honestly, I don't need to look at it because the version that I have will draw arrows on my chart for the two lines that are of interest to me. I don't worry about the histogram at all. All I'm looking at really is when the green line crosses either up over the red or down below the red. And so if I put this down again, what's nice about this particular indicator is when that happens, maybe you can't see it, but there's a little green arrow there, and there's a red arrow here. I don't really use those as entry signals. I use the bars opening above the super trend indicators, but I use them as confirmation, and most importantly, I use it as an exit. So if we take a look at this trade, okay? So hold on a second. Let me pull this in so you can see a little. There we go, a little bit better. All right. So here is the first instance that we have a bar opening above all three super trends and above the moving average. So this is our signal bar here. Okay, so you can see that it went up 3, 10, 20, 30. Okay, and that took the first take profit, and it then ran until I had 3 in a row coming down, which is right there. So that was my exit. Then I immediately had another interest signal here, and this is still valid because we still have a green arrow back here, and we're above our 3 super trends and our moving average. So that opens here, it went up, it took its first take profit, and then it came here. Now, if you notice carefully, there's a red arrow there. That would have taken me out, or the 3 candles in the reverse color also would have taken me out. But that's how I use the QQE as an exit indicator. So again, I call this one 3ST QQE MA because that's what it takes into consideration. 3 super trend, and then 1 moving average, and then the QQE, which I use the QQE new, let me go over those settings real quick. I don't think I did that. Okay, so here's the QQE new. This particular one, okay, I have a high smoothing factor. I have a smoothing factor of 35, RSI 6, etc., and I use a 60 and a 40 upper band. That's what gives me these arrows here when that red line and green line cross. All right, so that's that system. And I've got one more to share with you today, but I have a few more, but I don't have time to show you today. I know that this is a long video, so bear with me. Let's take a look at the next one. All right, so here is another system. And again, it's using the 10-pip Renkos. Now, I just have different color here. The gray ones are bullish and the white ones are bearish. And I call this system DCQQE. I'm sorry, DCSTQQE. And that stands for, what's it called? Let me pull it up. Donchian bands. Okay, and I have them set to a period of 6 for my ranking. Donchian bands, okay, and that is this blue line and this kind of brown line. So this works similar to how the Keltner channel works, is I don't want to trade while the bricks are within, but this is calculated a little differently, and so I thought I would give it a try. It's also using 1 super trend, And that one has a very, very high multiplier. So this super trend is periods of 10 and a multiplier of 12. So if you look at it, if you zoom out, you can see that it's pretty, slow, to change, but it gives you a big overall of the trend. That's why I have that 12 in there set up. Okay, and then I have my QQE down here again. And the QQE has the same smoothing factor, again, of 35 that we saw in the other system. And again, I don't need all this. All I need to see are these arrows that are plotted here. And again, that's just for visual. I don't need to see anything because my EA actually does everything, but I like to know what's going on, so I follow. Let's take a look at this. So this rule is, okay, here you can see we have a brick closing below the channel here. So that would have been a valid sell. However, it didn't go in our favor, and that was a losing trade. But then as the super trend kicked over and our QQE kicked over, now we can look at this brick closing above the blue, and this one went to here. And that one, it's too small. I can't tell how many it was. I'm sorry, these old eyes. But I will take it. It's a decent trade. So the first one, and again, I didn't have my EA running on this, and it would have taken 1, 2, 3, hit the first take profit, gone up, and then come back down. So I think that they would have both hit at 30. Now the reason it came out here instead of here is because I also use this channel as another exit point. So anytime the bars are equal to or below for a buy, then I close the trade. Likewise, if I'm in a sell, anytime the bars are equal to or above, I close the sell. So very similar system. For this one, we would have ignored this because our super trend here is blue. So this one would not have been valid though, because you can see our QQE was still red. So we had to wait until this switched over. So this would have been our signal right here. The bar opened above the blue channel, and super trend was blue. So we go in here, and it would have gone 1, 2, 3. It would have hit our first take profit, and then it would have come out right there. And again, I have several different exits on this one. I have the QQE exit, which is this red arrow. I have the DC channel, which would have taken it out. Plus, I also have 3 bars now. Just as good, trailing stop type of a thing. So there you go. There are 3 things I'm working at. So I'm test driving them all right now. I've got it all set up for next week, and I'm basically going to just be running these trades. I'm only running them on 0.01 lots, so we're not looking at big money moves. I'm just looking at kind of pip moves. Which system will keep me out of losing trades and give me the most successful winning trades. So I will be back and I'll let you know how it went. Until then, thanks for sticking with me, and hopefully I will be talking to you much more on. Take care.